Yeah, man. I just wanted to feel out your process, man. I kind of understand everything,
Yeah,
but like when T Mac dropping stuff and you dropping stuff, it seems
on the same
like y'all
accord.
like y'all be hunting for specific, I guess, patterns.
Yeah.
And I was just wondering how y'all see those patterns, or do you go look for them? I know AB said something about Celsius. A pattern was coming, but it hadn't formed yet. But he can already see it coming. How do y'all do that?
So really, that just come with studying. Honestly, um, it's just pretty much like pattern recognition. Honestly, I got like a watch list that I go through, and then what I normally do is, so first off, I kind of like start with like drawing higher highs and lower lows. So like once you start doing that on the chart, it will end up eventually forming a pattern. So it might form a triangle pattern or a bull flag, bear flag, or anything like that. So really, honestly, I just like it's just really just pattern recognition. Honestly, like I got these little flashcards here that I use, and so like that's how I kind of pretty much studying. So I'll show you like a pretty much an example here.
Yeah, I see when y'all put those in the chat and stuff, man.
Yeah,
But when I'm looking at the candles, I
yeah. Don't overlook like honestly, bro. Like so I'm a PT student, so like how I learn like the anatomy of the body, like the muscles with flashcards. So the
mm-hmm.
best way I learn this, like every night before I go to bed, I look at these. So if you can see, this is a what? A triple bottom right here. And
Yeah.
so I'm going through these flashcards. And so whenever I'm looking through these charts, I'm like, it automatically, I just pick up on them. And so what I normally do is the best way to do it is I start on a higher time frame. So I start on the monthly, then I go down to the weekly to see if I see anything, into the daily, into the 1 hour. And so with each time frame, I connect the higher high. So if I connect a higher to another high and a low to another low, you will see a triangle just like this. And then it comes out to be a symmetrical triangle. But
That
it's
was
just it's
another
kind of
thing I
like
wanted to ask you too. How was y'all determining that? Yeah, that
so it's
triangle is
yeah.
head.
Honestly, you just gotta look at these patterns. This is another good book, 14 Candle. This right here, this is another good book. And so what I normally do is honestly, man, it's just like I can look at a chart and then I can see these patterns. I wish is there a way I can like screen
Yeah,
share? Okay, yeah.
that's what I
I'll log in the trading view.
use. Anything else besides Trading View?
No, I just at first I was using Finviz. That's another great way to start. If you can lock on Finviz, I'll pull up that too towards the end. But like you type in a ticket symbol on Finviz, it'll automatically start drawing trend lines, support and resistance for you. And then even with that, I think they have like a setting to where you can put in like a technical analysis and you can put in a certain pattern that you're looking for, and it'll automatically show up charts with those type of patterns on there. So you can use
Okay,
those as well.
gotcha.
But I got to the point now I don't really use it as much, but I could just kind of like look through things and just
You got the free version of Trade View?
no, I got the I bought it. So I bought the annual version of TradingView.
Oh,
Honestly,
okay.
you really don't need to buy it. Like I've been like trading for like 5 years, but only reason that I bought it is because I just wanted extra indicators. But here, I'll start with. And so this is my watch list too. So I got everything broken down. So let's look at the futures here. So this is the NASDAQ. Here, I clear the entire thing for you. Yeah, so the only reason that I bought this version of Trading View is just to add extra indicators. And these are all the indicators that I use. Really, it's just the moving average, simple moving average, 200 moving average, and the exponential moving average. I got that from Ian Dunlap, the 420, but I don't even really use that, honestly. You can just kind of mess around with the numbers, which one you work with best. And then another indicator that I use is RSI.
Oh yeah,
And
for
so,
sure.
and like you can like double click, and I got that down. I'll go over that too. But honestly, man, this is how I start. So I look at the monthly, and I see if I look at any patterns here at the monthly chart. I really don't see anything honestly here at the monthly. So what I start with at the monthly is I start charting the like support zones and resistance. So right here, we got resistance at the top, and then we got like a little resistance here. I'm sorry, not resistance, support here at the bottom.
Now you going off the wick or the candle?
So I go off both. Like as you get like as you start going, as I start breaking down like the smaller time frames, you'll kind of see like it was just be candles all in that area. So I don't put like a necessary like pinpoint like price. I put like a specific area. That's why I use this little space here.
Okay.
And so you can see here, this is also, you know, remember like support and resistance is like two or more contact areas. So we got one right here. So one here, and then the second one here. So this would be considered support here. So at one point, this was resistance. And like, this is how like I got used to it. So right here, I can even see a bull flag right here. And so I connect the higher highs and the lower lows. You see what I'm talking about here?
And this, we looking at the monthly.
Yep, this is looking at the monthly. So like you can even see these patterns on the monthly. So imagine if we would have saw this 2023, we already knew about our patterns. Like we know what bull flags look like. And so I look at it on a monthly chart. This is an easy swing leap, how far you want to go out. Because we know that bull flags are pretty good. And like the higher the time frame, you see that trading pattern, the stronger the move is. So if I would have saw this.
Why I was confused at right there, how you were drawing these trend lines here. So is it because of the candles or just because it's on the downtrend? I heard you say higher high and lower low.
Because so right here, so it can be, so these are lower highs. So this is a high right here, then it's a lower high, then another lower high. So then I would just connect this trend line right here. And then right here we have a lower low, another lower low, another lower low. So it won't be necessarily like perfect, like it'll like just lined up, but you know, just in that general area.
Okay, the higher high and the lower low of the same candles?
I'm sorry, can you repeat that?
I said the higher high and the lower low of the same candles?
Yeah. You mean like right here? Okay. Yeah, right here. So just look for that. This is a higher high. Let me see if I can zoom in right here. Yeah, this is a higher high, a higher high. I mean, I'm sorry, a higher low, higher low, higher low. See these lows, these highs get lower and lower and lower, and you just connect the trend line right there. So you can kind of see we was in a downtrend. Right. So this is July 2023, August 2023, September 2023. And then like with the data, we know, of course, August, September is always like bearish months. So we just connect those. And then even with the lows within those months, the same candle, it just keep connecting them like that. And then I can just, so this right here, this pattern right here is a bull flag. And so what I normally do is, let me put it back here. You can look
up. And that's at least 3 or 4 days, right?
No, okay. Talk about this right here.
Well, we on the monthly. So
yeah, monthly. Yeah, so monthly. So yeah, these are monthly.
So that's candles. 3 or 4 months in a row.
Yeah, 3 or 4 months. And so even with this, you can break it down. So since I see it on a monthly, my contracts, I wouldn't want to enter like any type of 2-week contracts or 4-week contracts or even a month contract. The higher the time frame that you're looking on, the farther out you need to go on your contracts. That makes sense?
Yeah.
So since we are swing traders and leaps, most of our charting, I feel like needs to come from is the weekly and the monthly time frames. Honestly, weekly and up. You look at those time frames. If you're looking for like any type of like swings or leaps, you look at those higher time frames.
Now I'm just so used to looking at daily. That's the only thing I look at. So you have a confirmed bull flag here.
Yep, confirmed bull flag. And let me show you what that bull flag looks like.
I want to understand how to execute my entry.
Okay.
Because the numbers are so large.
So right, boom, you see that right here?
Yeah.
That's exactly what this looks like. So now, so since we know these candles are monthly candles, you got to be patient. So that's why everybody say this game is for patience man game. So we got to look for that next candle. So we know next candle is going to be a monthly candle. So we wait in November to see if November breaks out of that bull flag. So once I realize it breaks out that previous high of the previous candle, so 15, what's that? Yeah, I said 15,500. When it breaks out of that, that's when I would consider entering in on a swing call right here.
When it passed that wick.
Yep. So you want to like for entries and exit, you can always look at the previous candle high and low just to confirm. So right here, boom. So then you can get real technical with it. So we know this is a level here, boom. This is a level here. Oh, boom. We took out that level. We took out that level. We took out that level.
All right, I got it now. So before I was a little confused because I'm thinking your trend line there. That's what y'all were saying when they go past the yellow trend line.
Yeah, you can go past this. Yeah, you can do that too. But like it's more conservative if you would just kind of wait until it takes out that previous candle, you know, just to confirm that direction. Yeah. So you can, yeah, honestly, you can enter here. That's fine. There's nothing wrong with that. I mean, if you want to hop in early, you can do that. But what I normally do is depending on what stock I'm trading. So if I know how it moves or whatever, like if it's like QQQ or SPY, I love trading those because those are a lot easier to trade. I can enter in right off the break here. And then once you enter in, you know, rather than sitting down, like if you get down 20, 30%, you can set your stop loss right there at your entry a little bit below here. Just in case if anything happens, you know, with Trump or anything like that. So as you can see here, once we broke out, we broke that level there, broke that level there, broke that level there. And then the next month came open. So honestly, you could have stayed in this play. Only thing you have to do was set you a stop loss. So you right here, you probably been up what 40%. So you said like, hey, I'm doing a trailing stop loss at 35, 30% here based off this level. So if it gets below 15,900, I'm getting out. So you can stay in. So you can continue stay in and ride this bull flag all the way up. Boom, boom, stay in all the way like that. And then that's how I pretty much play it. And so this is the monthly time frame. And so you can kind of
start with the monthly and work your way back.
Yeah.
You immediately start bull flag on the monthly. Do you automatically start focusing on executing the play, or you wait till you?
Yeah. So I immediately start. Yeah. If I saw this on the monthly, right? So let's say it showed this. So I'm like, all right, cool. We're in the month of October. So I wait till the next month of November. I'm seeing. Let me see if November breaks out. If November, you have to be patient and wait, because if November, it could just keep going down. And if it keeps going down, I just extend that trend line. And it's just a further bull flag, a further flag down. And it will just keep going down just like that. Just keep connecting the lower lows each time. And then I'll wait. You have to wait until it breaks out. So whatever that next candle is. So it'll take a month for me to enter this play. I have to patiently wait a month for me to enter this play right here. Now, if this is on a weekly time frame, let's see if we can find. So boom. So now even with that, so you see this right here? I drew this bull flag on a monthly, and it still shows up on a weekly. If you can see that there.
Same pattern?
Yep, same pattern. Same pattern. It's just a smaller time frame. It looks even clearer. The smaller and smaller time frame is, it gets even clear, more clear. Boom. You see that?
Okay.
It doesn't change at all. So if you see it on the monthly,
reiterate, I start my trend lines with higher highs and lower lows of the candles to identify the bull flag.
Yep, that's on. So right here we got this is a lower high, a lower high, a lower high. So once I get two lower highs, I'll go ahead and start making my trend line. And then so what I would have did here was, let's see. All right, this is the first high. Then I got my second lower high. So I would already drew my trend line to right here. And so once I know it's like, hey, next time it comes to this is going to be the third touch of support, of resistance. So it's either going to break out or it's either going to come down, which it did. And it came down. And then let's see if we retest this area again. So we hit resistance right here. Either we was going to come back down or either we were going to take off. Boom, we took off. And so you could have entered in right here. And you could set you a stop loss like right here. This new old resistance becomes support right now. And you could have entered in right here. And then look at here. This is just me. This looked like another bull flag. I'm connecting the lower lows right here and the lower highs right here. You see that right there?
I got you now.
See? And like bull flags, it can confirm like a continuation. So boom, we had it here. And then now a lot of people, what they would have did was they would have like saw the market run. Like, oh, I need to hop in. I need to hop in. No, wait. I promise you, if you wait, a pattern will form. Either a bull flag, bear flag, double top, double bottom, something will form. You just got to wait. Just be patient. And then look, I could have been like, okay, cool. Everybody already been in right here. I'm not gonna hop in. I don't have no FOMO. I'm sure a pattern will form. And so boom, I'm like, oh, I see a bull flag right here. Let me hop in, just like that.
Oh man, I'm feeling that right now. So
Yeah.
just
So
want to reiterate the higher highs and lower lows.
mm-hmm.
All right. So because it's at the top right now, and then it went down, but it went back up, but it didn't go as high as the previous. That's a higher low.
I'm sorry. Repeat that. Say that again.
I said, trying to reiterate that part, make sure I understand the verbiage. So on your higher highs and lower lows, if it was starting at the top, then it fell down,
mm-hmm.
and then it went back up, but it didn't go up as far as the previous.
Yeah, there you go. Yep.
It's high, but it's lower than the previous high.
There you go.
Gotcha.
That's it right there. And I'll show you a reference book. Oh, let me grab a book for you. If you don't get anything else from this video, man, read this book, Trading the Trend. It'll tell you everything right here.
Trading the Trends.
Yep.
Is it at Amazon?
Yeah, it's on Amazon by Fred McAllen. Yeah, this book right here. I mean, this is everything. Like I feel like you're going to start off with technical analysis, start with trends, support and resistance. Indicators is up to you. I don't really get too particular about the indicators. I mean, I haven't mastered this or anything, but just for me personally, like to calm my anxiety so I can kind of see a clear direction, I start with the trend lines. I start with my support and resistance. Then me personally, I feel like moving average, everyone should use that because it's the average price. So it's a mathematical formula. So there's nothing wrong, right or wrong with that, right? So it's just the average price of the past 30 days. If you're using a 30 moving average, the 200 moving average is the past year. The last 200 trading days, that's the average price. So you got to think of it that way. So you should use those threes, and then like RSI is up to you. I use that personally just because I'm used to it. I've been using it for a while. You can use MACD, you can use volume profile, whatever's you comfortable with, because there's no perfect indicator. If it was, everybody be using it, everybody be rich.
Well, you saw I was using the Bollinger Band. That's how I jumped into the AVGO.
Exactly. Yeah.
So I use that in RSI along with the alligator. The alligator kind of helps me identify when it's going to turn. But that's what you guys use here with the trend lines.
Yeah, and you can use trend lines with the Bollinger Bands. You can use that both.
So right now that you showed me this, man, the bull flag seemed pretty simple to define.
Yeah.
Now I saw some other guy. He said, it's over 20 chart patterns. But he said there's 4 that he looked for. I guess descending triangle, ascending triangle, and then the bull and bear flag.
Yep. Yeah, let me show you that. And so another thing I'll give y'all too is like I break down my this is my watch list too. So I start with the futures, I start with the sectors, then I got crypto too. I'm only looking at 6 crypto, the top 10 NASDAQ, top 10 S&P, top 10 Dows. Then I break down, I go through each sector, put in every stock. And so that's just how I look at the market. So this is like my own personal heat map, if you want to say. So with that being said, let me go to XLK. I called this bear flag out, I want to say last week that I saw. So if you see like a bear flag or a bull flag, even on the sectors, then you can kind of expect that those stocks inside those will have pretty much the same setup. So if you look here, we came down from highs. And right here, this is another pattern too. It's called a double top. So 1, 2, boom. This is a double top.
Now,
so every pattern is not going to be perfect.
I got a little T-Mac pamphlet right here.
Yeah, I mean, honestly, you just it's just pattern recognition, man. Like, you just gotta like study it. Honestly, like I can look for it. It is, and
you said honestly, double top.
Double top, yeah. And I'll show you what that looks like. So double top is this right here. So you just with these books and these little flashcards, like study like all the bullish patterns first. It's a lot of patterns out there, but the main ones that I see is like double top, double bottom, bear flag, bull flag, and the triangles. Those are the main ones. So this is double top. You see this double top right here? 1, 2. Then we come here. Same thing. 1, 2. Then we broke neckline and we fell. And then let me tell you this, double top, that's like a bearish indicator, right? So since it fell, we know we're in a bearish trend, if you want to say. So even though we're in a bearish trend, the primary trend is down, I can guarantee another like bearish pattern is going to form. And then that's when we had the bearish flag. So you just have to be patient. If you didn't get in here, don't trip. A pattern will form, because a lot of people got in right here with this cap bounce. Everybody think, oh, we had calls and everything was looking good. I was like, no, I'm chilling because something's going to form. If the primary trend is down, some pattern or secondary trend is going to allow me to enter in. This is like a pullback, but on the bearish side, if that makes sense, right? It's like a little pullback. Yeah. So we went down, went up. That's considered a pullback. Now this is my entry right here, so I can see what pattern forms. So this is a bear flag, and so then I go in here. I've been studying bear flags. I know what they look like. Boom, right here. This is what a bear flag looks like. Right there. See that?
So we went from a double top, and then it transitioned to bear flag.
Yep, boom. And now you see those are two bearish indicators. So if we would have saw this right here, we're like, okay, we see a double top on, so we know that's bearish. So the market's going to come down eventually, right? And honestly, I mean, everything's got to come down at some point. You know, the market's been running pretty high. And then we saw that double top and we fell. And then that's when we start falling down. And we start crossing back over the 200 moving average. That's another key thing right here. Anytime that we're going over or above the moving average, you know, that's the direction you want to play. And so after we broke that double top, we cross over the 200 moving day average. Then we form a bear flag, and then we fell. And then even right here today, usually like after these patterns, we might have a retest. So a lot of people would have been like, you know, I made money right here. It wasn't a lot, but you know, you could have played this to the downside. And then people start coming in thinking dip buyers, they start coming in buying, and it's going to come up, retest, and comes back down. So if you know the overall trend is down, play in that direction. Don't try to force it. Like you got to look for bullish like patterns, you know, in order to start playing that direction. So yeah, that's what happens here. And then you start looking at it through here. Looks like Apple. Yep. Apple has a bear flag. So that's why I'm not in any calls or anything on that, because it's forming a bear flag. So I'm like, all right, cool. We can keep running up. But like very rarely do stuff just go down and run back up. You know, they're going to form some type of pattern. So it's going to.
What are we on right now? Weekly or daily?
I'm sorry. This is a daily chart.
Daily? Okay.
Yeah, it's a daily chart right here, daily. And so right here, I know this is a bear flag. So whenever Apple comes right here, you can honestly, I think on a trading view, yeah, you can set alerts on these trend lines. So add alert on trend line. If it breaks, I look at it, boom. So once it breaks this level, I can start playing puts right down here. Just like that. We had a bear flag on Apple because of XLK. We had a bear flag on Microsoft. We got a bear flag on Visa. That's why, no disrespect to Trap, but that's why I didn't like that Visa play. Is because I saw this bear flag right here. This is just me personally, like looking at it technically. But fundamentally, this is a great company, but like technicals, I wouldn't get in right now because like I see this bear flag. And so
Trap just ran a V play, huh?
Yeah. Which is, you know, Visa is like great company. Yeah. So it's just been like, when I saw that, I was like, dang, no, I see this bear flag, you know, let me catch the pullback. So it's gonna run up and it's gonna fall, and it might fall back down here. You know what's crazy about that is like, this is how like I be looking at it. So we ran up and then we fall here and then we run back up here. That's a double bottom. So
all right, what were you basing that fall on?
The call on like this, like double bottom right here.
Yeah.
So this is just like an idea of what could happen. Like if I wanted to enter in on a Visa call, I feel like one way that I can enter a pattern that I can potentially see based off this setup is a double bottom. So this is just me looking into the future. So right here, oh no, not that. I'm sorry. So right here, come here. We know this is a bear flag. So after this break of the trend line, we could fall down here to this area, another area right here, because this is support right here. So whenever it gets to 326, it could come here, land on support. If it holds here for a couple of days, we could run back up. And if we do run back up, dang, I keep you the wrong one. If we do run back up, that will perform a double bottom. And so you'll really want to enter in at 326. And a double bottom is, let me show you. It's this right here.
Double bottom is the reverse of the double top.
Got you. So yeah. So then we can perform that. You see that?
Yeah.
So this is a potential. This is how everything lines up. So I know if we get here at 326 and if we hold this level here, we're going to form some type of support because we touched this level before here. And if we do, that's going to be that second bottom. And then that's going to be a double bottom. And then if we have like some bullish green candles here, like hammers, that's a whole nother thing. Like bullish candlestick patterns, then we can run back up to the upside and form a double bottom.
All right.
So that's what that was.
So with this double bottom, same as the double top, if you just like you just said, you're looking into the future. You got that first dip, which was 326. Kind of mark that, and if you go up and come back down to 326 again, that's gonna signal you for the double top or double bottom.
Yeah. So let's say if it comes, go ahead.
Yeah, because it hit the 326 again and went back up, that's gonna signal you that that's a confirmed double bottom.
Yeah. So let's say next week, whatever, it comes down 326, 330, 335, it comes all the way down 326. I'm expecting at some point, like usually like as buyers do, as everybody do, they're gonna say, oh, we're gonna buy the dip, because everybody think the bottom is in at the end. This is normally where people will start buying, like even like regular like retails and institutional people start buying at these support levels. So if we start getting to 326, I'm not entering in this place just because it hit 326. I need to see some bullish candles. So I need to see like a hammer. I need to see like a spinning top. I need to see like any type of like bullish candlesticks. So you got a hammer, inverted hammer, spinning top, a doji. Like these are all type of candlestick patterns that are bullish. If I see these forming here at this area, plus we're on support, then we have potential to run back up here, and then they'll be performing that double bottom. Boom.
Can you make a decision off one candle, or you need like 2 or 3?
Honestly, it'll be best if you get like 2 or 3. I kind of let anything can happen. I feel like if you can look here, right here, this is like a reverse hammer, like inverted hammer, and then we have a bullish engulfing pattern. That's like one of the most powerful candlestick patterns, is a bullish engulfing pattern right here. So that's when like the next candle takes out the previous candle body candle, the entire body out. So we open here below, and then we took out that previous candle entire body. So right here, this could indicate a reversal is coming. And so I could have entered in. I saw this bullish candle, this happened. I'm like, okay, cool. And then I wait. Okay, like I said, I see this bullish engulfing candle. And then I wait the next day. I'm like, all right, let me see how we open up the next day just to confirm it. And so I would enter in on this candle's high right here, which was 331 or whatever. So I'll wait until the next candle. If we get above 331, then I'm like, okay, cool. I think we're going to turn the direction. And then, of course, it did that. And I could have entered in right there, 331, and stayed in that play, kept going in and kept playing the upside here, knowing that eventually we was going to have to probably fall back down because nothing just goes straight down and comes like right back up like that perfectly. That rarely happens. So yeah,
All right.
So this is like candlestick pattern right there.
All right, I'm pretty familiar with the basics of the candles. So now that you say you got those 2 candles, that red one that was next to it with the long wick, what does that tell you?
Which one? Right here?
Go up one.
This one?
The other side.
Over here?
Yeah, right there. Yeah, that one.
That doesn't tell. I mean, honestly, so like rather if I need to get out or like stay in the play or get out?
Yeah, I'm just saying because we know it's going to the upside, but then that one red candle right there kind of throw me off for that day.
Good. Perfect. I'm glad you asked that. So here, let me take this out. So if we entered right here, boom. So
Yeah.
let's say I got in this call at Visa at 331.73 and we ran up. And then the next day it came down here. I'm still having I'm still break even. I haven't lost any money. Your stop loss should be here. So the only way you get out of this trade is if you break this level right here, that previous candle. So the only way you can stay in this trade, and you can set your stop loss to like 320, like 327. If it closed below 327, get out of the play. You gotta let the play, let it run, let it play out. You gotta keep letting it play out. And then like another thing too, like just because it might be green earlier that day, you gotta like officially let these candles close. Like you gotta let this day close. So you see that we open up here, we came all the way down here probably in the morning, came back up, and then we closed right there. I mean, you're still in profit. So you still gotta let the candle close. You gotta be patient and think about it. We playing these on these daily time frames. These are daily candles. So you gotta be patient, wait the next day and see what forms. As long as you, and then another thing here too. I'm sorry I didn't mention this. We get higher lows. That's good. Higher low, higher low, higher low. You would have made a lot of money right there. You could have got out right there, or you still could have stayed in and set your stop loss right here. A higher low, higher low, higher low, higher low. Those are all still bullish indicators too, because that shows that each low is getting higher, so it's moving up in the uptrend right there.
Gotcha. All right, man. I'm feeling a little better. Hello, Janisha. You got any questions? I see you popped in.
Hi. Can y'all hear me?
Yeah, we can hear you.
Y'all was in the zone, I was like, let me just be a fly on the wall.
Yeah, my bad. I know I can get it. I get much into something else.
I'm good. How you guys doing?
Doing well.
Oh, I'm J Money in the chat.
Oh, J Money. Okay.
Okay.
J Money.
Yeah, it's me. So I literally just started looking at charts like 2 days ago. So I'm just here to learn. And guys, T Mac and a lot of the other people in the chat has been like sending me different videos and stuff to watch. Like I just started learning like support and resistance levels. I just started learning like to remember like, okay, if RSI is this high is oversold, and if it's this low is overbought. And so I'm just kind of getting my brain used to that. And also even just reading the candles, like I still have to like look back in my book, okay, like which part of the red candle is open and closed again, because I know it's opposite. So that's where I'm at with it.
Okay. Yeah. That's good. That you're looking to learn and everything. Honestly, I would say just stick with what you're doing. Like, try not to add like indicators and all that stuff right now. I feel like a good starting point is like support, resistance, and trend lines. Once you get those, then you can kind of see the overall trend of what stock you're looking at. And then you can start looking at like good buy-in prices. Like with support, you want to buy at support. So if you're looking at buy and hold, you can start buying at support prices. Then looking at resistance, like, okay, I need to look to sell here. I feel like if you start with trend lines and support and resistance, you're good. And once you kind of get the hang of that, then you can start adding in on like, all these different indicators like RSI and stuff like that. That's just me personally, how I would like, if I had to start back over looking at charts, I would start with just that and then just slowly add in on indicators. Because the market.
I'm gonna look up that book you said, Trading the Trend. I'm trying to see if I can get a little free PDF online somewhere.
Yeah, Trading the Trend. That's a good one. Like, yeah, start with this, Trading the Trend. This one right here. These are both books by Fred McAllen. I'm sure this is very popular in the chat. This is a great book. Like once I read this, it's like it clicked like that. Another one is here.
The 14. Okay, I've seen that one. I didn't read it though. I've seen that.
Yeah, that one. And then this one too. I haven't seen too many people like how to swing.
No, I didn't see that one yet.
But yeah, that's pretty much similar to like Fred McAllen's book. Pretty much the same stuff. And then like another YouTube channel that I watch is Wise Trade, WYSE.
Yeah.
Look at.
He's sending me that. He's sending me videos from there a lot.
Look.
Wise Trade.
Wise trade.
Yeah, but it's WYSE.
Yeah, WYSE
Yeah.
trade. Look at all that stuff he has. He breaks down every indicator. I would start
Yeah, I'm
with
not gonna
support.
lie, he make it simple. I
Yeah,
can catch
yeah, he
it.
does. Yeah, he
I
does.
can catch it. What he's saying. I don't know if I could do it, but I
No,
understand what he's
you
doing
can
when
do
he
it. Nah,
explaining it.
nah, you can do it. It's gonna take time. You can do it. I'm still putting it in practice. You know, I'm not perfect yet. I be learning new stuff. I be,
So Tyler and Thavian, like, how are you guys feeling today? Like, we just ended the first quarter. We in the second quarter. Like, how we feeling? Like, did you guys take any time to kind of reassess what happened and like, your goals and what you want to do moving forward differently?
yeah,
Well,
I'm not
for
gonna
me,
lie.
man, I made all my decisions at the beginning of the year based on how I moved last year. I was in about 28 plays. This year, I decided to break it down. The plays that did make me money last year, I wanted to focus on those this year, which was ABTO, Walmart, Palantir, and I had MU on there, but I went on and took MU off. So I might replace that one with maybe Eli Lilly or Netflix. But I'm just trying to double down on a few companies with more contracts. So I was all over the place last year. I made a lot of money, but it was all one contract. I mean, I get my 100% get out. I get my 75% get out. Some of them I held too long, lost money. But ultimately, like now, I'm just focusing on these and just doubling down on my contracts. And I know that last year around this time, I made a lot of money with multiple plays. But if I'd have doubled down, like on more contracts for one play, the right play,
Mm-hmm.
change it, bro.
Yeah,
That's
Right.
where I'm at right now. So
yeah.
it's
You
now
don't really need that many
and
stocks.
after September. These are the two times to make the most money. Now, whenever this thing turn back around, most contracts is possible up until June and July, and then that Christmas rally. After quad winching, get as many as you can, and get ready. Those are two times I've seen where you can make the most money. All the other stuff, you know what I'm saying, you can nickel and dime here and there because the market is choppy. But that's where I've learned to deploy the most capital, the most contracts, and catch this run.
I like that. That was good. That was
Yeah,
good.
that's good.
And see, I've been getting in and out, based off trap formula, RSI, moving averages, and then guys like T Bolden, what I'm saying, with the chart, and I've been listening to him, and I definitely take their advice, and then I put it against what I'm saying, and then they like confirm it for me, and then that's when I just execute. But with the charting, you can get a more precise, better entry. Before, say I was relying on pullback, 15%, 20%, then jump in, then whatever happens. I might get in too early, but I'm still in a good position. So when it do run back up, I'm making money. But I'm tired of clawing my way out the hole and going back up. I want to get in on that entry and immediately start running. That's my focus this year.
Right. Me too. I feel like a lot of new traders feel like that. Like we need better help with like we know where to go. We just need to enter and exit the right places,
Yeah, I agree. Yeah, honestly, yeah, same thing. I feel like you just focus in like one or two. Really, like since like last year, I've been focusing like just QQQ. Like whenever I'm trading QQQ swings, I go heavy as I can. Because I know there's no news that can alter that. I mean, it's a heavy trend. So if it's going up, it's gonna go up. I feel like SPY and QQQ, if you're doing option contracts, definitely add those two. Because like those are you can easily find patterns on that. You can easily look at the trend on that compared to the futures, like SPY and QQQ. The contracts look good. There's always volume. You can pick any strike price you want. You can go far out, next day, next week. You can do anything with that.
Yeah.
One thing I've been focused on. I really haven't entered anything heavy. I've been got out. Once I saw this stuff, I was like, no, I'm not getting in any calls. I'm not in no calls. I've been playing puts. Whenever I see like a bearish setup, I get in the puts. I get in and I get out, take my money. I'm sitting on a good amount of cash. Only thing I'm looking at right now is like really Bitcoin and adding in into my buy and hold, especially like the IBIT ETF. If it gets to like below 43, then that's why I'm gonna buy as much as I can, and then and then run some leap options on that as well.
You never really held at 100%, huh? You typically get out about 15, 20%.
Well, right. Currently within this market, I get out at 15, 20%. Like if I'm doing calls, yeah, I've hit 100% a couple of times. Like, yeah, I'll stay in there. You know, depending on like I follow the overall trend. So if the market is going up and it's bullish, I can stay in the calls and stuff like that. It'll hit 80, 100%. But recently, due to my life skills right now and me doing the school and stuff, I can get in and get out. And then I don't really like to. I'm not swinging any calls right now. I don't see anything that I like. And then I give y'all one free game that I don't think nobody really knows this. I did this on my own study. So you can use this to the end of time. So if you go to QQQ, yeah, I'll wipe out my whole thing. I'll read y'all this later. So one thing that I realized, you said what?
You said we in QQQ?
Yeah, this is QQQ chart right here.
Okay.
Right here. So this is on the daily time frame. So I broke this down. So if you have the 200 moving average, if you pay attention to the price action, like every time we go above and below the moving average, you can play that direction. So whenever we cross here, you could have played a put and you could have made money there. If you look here, and this is also when you know, like you can get out of the market. So whenever it crosses below the 200 moving average, you can get out of the market or you can play that direction. So we crossed here, you can play put. It came here, it crossed, but we closed above, right back above, so you can play calls here. And so this is the 200-day moving average. So if you can look here, you can literally see where you could have got out the market in 2022 because it was below the 200-day moving average, because you could have been in puts here. You could have ride this down and then, you know, took profit here. And then whenever it retested here, you were like, oh, okay, we about to see what we're going to do. If we go above this line, I can play calls. Nah, we rejected and went straight back down. Whenever we cross back over, it's like, all right, now it's time to get back into the market. So the market started running back up in 2023. We start going back over the 200-day moving average. And then another thing here, remember like that bull flag I was talking about? Here it is right there. So that's like two bullish indicators. We went back up the 200-day moving average and the bull flag. So you could have stayed in the whole time. Another bull flag came, stayed in. Another bull flag, stay in. That's a 200-day moving average. You got to wait a long time for this to develop. But I looked at this myself. It's an 80%, like an 80% win rate with the 50-day moving average. So if you literally just play above and below the 50-day moving average, you'll make money. So whenever it crosses, play that direction. So I could have entered in here and just played puts all the way down. And so usually these trends last for like 2 to 3 days or 3 to 5 days. So whenever it crosses, do call, put. You do call right here, but you have to wait until the candle actually close. So you could have went here, did put on the next day, it was below. You could have did put, could have took money there. Whenever we close back up, do call there, right here. You could play above or below this line. So above here, call, below here, put. Above here, call, below here, put.
I have a question.
Yeah.
I've heard that before, but in terms of like confirmation, like say for example, I don't know, can you go to the right a little bit more?
Yeah.
Back to the chart. Go to the right. You see right there above, right after that looking W. I don't know if you call that
right here.
to the right a little bit more. To the right, to the right, to the right, a little bit more to the right. Over there, that trend right there. You see how like
right here?
It's yeah, like when it starts right there and it goes above, right? And it's like kind of choppy-ish, like you don't really know. Like I'm sure there's exceptions to the rule. Like sometimes you think like, oh, we above the 50 and we could continue to go up, and then it may start going down. Is there any other confirmations we could look for to ensure like, because like what confirmation do we have like, yo, this is really about to run in the direction I think?
Yeah, that's a good question. Honestly, I would say the way I've been playing it, like it's been working out well for me. Like, hey, as long as we don't close below this blue line, I'm staying in. This is just one of those strategies. Like if we go above, as long as we don't close below this blue line, I'm staying in. But you just got to have the patience for it. So I mean, it's just honestly, it's just up to you how you want to play it. There's like no. That's why I said it's like an 80% win rate. Like when I went back and looked at it and circled the ones like, okay, this one worked out, this one didn't work out. So it's not gonna work out every time, but like most of the time it does. And so like this right here is a good example. But I want like heavily rely on this, but this is just like another tool, you know, like an easy grab. You know, whenever we cross back up, it's like this. You know what I'm saying? Get you some extra change there. It won't hurt. Or you know, the 200-day moving average. That's why I got my alert there. It was like, oh, okay, once we hit this, if we can get to this level, if we don't reject and go back down, if we can cross and go above this and close in green, I was like, okay, I can start looking at calls. That's so just like
tomorrow, if QQQ go up, well, most likely it will probably gap down because everything down right now.
I think it did actually.
Yeah, it'll probably gap down somewhere down there, 450 or so. I don't know, right? I've been hearing a lot of people say like, oh, you know, it has to fill the gap. Is that 100% a rule? Like, if it gaps down, does it really have to fill that gap and come back up and do something in that space that it dropped?
Yeah, I mean, it will fill that gap. Every gap is pretty much gets filled. I mean, I don't know when that happened. I don't know. But let's say we open up here tomorrow, and then we can continue to go down here for the next 3 months, whatever. But whenever we do have this bull market, I mean, it's going to get filled regardless. You know what I'm saying?
Right, yeah.
So like, I like if it like it may drop down and it may fill that gap tomorrow, but it may drop and continue to drop down. You know, that's why I like, even though the market, like I don't really react to like aftermarket stuff because I kind of wait till it open because that's when the market's open, people start buying and price can go up and go down. So like I don't really too trip off of the after the market stuff because like tonight is down, but tomorrow it might be up green, you know. So we kind of let the candles appear and then see what type of patterns form first before I consider entering. I never use like after hours stuff for my entries. That's just me personally.
What I was gonna say, so like how long after open would you say you would like see to, because like today, didn't the market open down and then it ended green? So like like how long do you like check to like, okay, we actually really going down?
Yeah. Today I did like a quick example. I guess David, you saw my Chipotle post there. But no, I was just yeah, that
Chipotle.
was like an example. Yeah, I have like used a trade to pay for it, but no.
Oh, you're the student.
Yeah.
Oh, I followed you. Oh, yes, it's coming back to me now.
Yeah, he bought that Chipotle out the market.
Yeah. Yeah. That's how I'm gonna take care of these student loans with this.
You gotta get this food.
Yeah, you know. Yeah. But yeah, like if the market opens, I just like I really don't want to day trade due to my profession. You know, I be seeing like, you know, patience in between times. So I can't really sit there and day trade. So I like to really do swings. So I really focus in on that. But whenever I have like some downtime, I'm looking at my phone. Then I some stuff. But honestly, like I'll just at least wait like 30 minutes, 30 minutes. I think one of these books that I read is like usually the amateurs, the beginners open the market, like the clever, the smart people close the market. So I saw that in a book. So I just kind of wait, let the market open up, see what it does, and then I look at if I'm day trading. I used to go on a 15-minute time frame. I was actually nice with this, but I just don't have time with it. But like if I would suggest if you're looking at entering on intraday, look at the 1 hour. So I'll say wait till 8:30, 9:30, 10:30, and then some type of pattern will form. So that's how I enter in here on this spot card. This was a bearish engulfing pattern. So once I saw this form, I'm like, oh, I'm gonna enter in right here, and I just play this put on the downside. Here's another pattern right here. I think this is an evening star. Oh no, this is a gravestone doji right here on the 1 hour. So if you would have saw that on the 1 hour, you're like, okay, I'm gonna enter in a put. That's a bearish signal. And then you could play puts right here.
I would like the upside down cross kind of thing.
Yeah, exactly. That's a great, yeah. So Yep, exactly. So that's what that was right there. And then we was
Wait, what's
talking
it called? A death
a
stone?
great no, it's called gravestone doji. Let me
Gravestone. Okay.
let me see if I can pull that up.
So if it's red, it's gonna be bearish, and if it's green,
I see that one on T-Make chart right here.
Oh, you see the gravestone doji?
Yeah. Okay.
Yeah. And so yeah, you see that gravestone doji and it's in the uptrend. So this was like a little uptrend right here. And we saw this little doji right here. It's like, oh, okay. Let me sellers start to come in. So think about it too. Like if the candle is green, buyers stepped in. If it's red, sellers. So think about if it's selling, I mean, who they selling to? Other people. And so it's gonna go down. If they're buying, then it's gonna go up. So that's the same concept right there.
I got a question here.
Yeah,
I was
up?
trying to play with the 15-minute today. I really didn't. I wasn't comfortable with it because, like I said, I'm only looking at day chart.
Mm-hmm.
So you jumped in on this the 15 or the 1 hour?
The one that I did earlier was the 1 hour.
The 1 hour.
Yeah.
So if I jump in on the 1 hour, we still trying to look for the same patterns like the falling wedge and stuff like that.
Yep. You look for all of that. All these patterns apply to every time frame. The only thing that changes is the lower the time frame, the quicker you get out. That's me. That's my personal rule. Like I know I entered in on that 1 hour. It's like, hey, this is the 1 hour trade. I'm not being in it no longer than 1 hour. I'm getting in. I'm getting out. I'm getting my money.
Okay. I got to make my decisions based on 1 hour. You know, get in, scalp a few dollars, and get out. And
exactly. Be on the safe side. Yep. Now, if you're in on a weekly, you know, hey, that's that weekly time frame. So that's when that swinging. That's when you can say, I got time on my contract. You know what I'm saying? Because you enter in off those weekly candles. So if you see these patterns on these weekly candles, it's going to take a week for it to play out to what you're saying. And so those are a couple of days, a couple of weeks, couple of months. That's when those swings and leaps come in. But since we all pretty much swings and like to do leaps, we need to start looking more at these weekly and monthly time frames to look for these patterns. And it may take some time. You can look at it daily. You can look at some daily stuff too. You know, you can look at some daily stuff, you know, make some money in between. But if you know, rather than enter in, some people saying, I saw somebody today, it's like they was on a 1 hour chart and they got an August contract. I'm like, why are you getting an August contract? You know, it don't make sense. You enter in off of 1 hour on a smaller time frame and you got an August contract. All those Greeks gonna mess up that contract. They talking about I'm gonna get the 30-50%. That's not gonna happen if you got in on an August contract and you in off of 1 hour. You know what I'm saying? Like get those smaller contracts. If you get in on a weekly on the next week, you can get 30-40% like in 10 minutes.
Because the Chipotle you did today was for the 4th, right?
Yeah. And so that's why I was able to hit that. I got that actually went up to like 20%, 15-20%. I know it's a small sample size, but it's like it happened like in 5 minutes. I got done eating my Chipotle. I looked at the market. I was like, oh, I see a bearish engulfing pattern, and we're gonna hop in. And it took me like 5 minutes. Got my 20%, pay for my Chipotle.
Period.
So, but yeah, that's
like
just
that, man. You sure helped me out today, man. I appreciate that.
Yeah, no problem, man. I appreciate you for having me and allowing me to share a little bit that I do know. I'm still learning. And I appreciate the chat and everybody that's in it. I be picking up, learning everything from everybody and try to apply to me like a human sponge. I use Trapping Tuesdays, Market Mondays, anybody that's giving out free game on the market, and I can apply it and it makes sense to me and help me be better. I'm gonna use it.
Word. Okay. Cool. I'm looking forward to tomorrow. I held my SPY put, guys. I gotta make sure I close in the green. I was so shook too. I was like, oh my God. I set up a stop loss and the shit didn't execute. Then that shit went down. And then I remembered last year when I was like running up 100%. Every trade I do, I was just winning back to back. Them times I didn't have no emotion. Like I had so much more emotional stability. And I was just like, you know what? Whatever Trump do, it is what it is. Like it's just money. And I just took my emotions out of it. And as soon as Trump started speaking, I was like, oh, thank God. I was like, okay, it looked like I may be good. I may be good on this one.
Yeah.
Well, I ain't got nothing else, man. I'm gonna go ahead and start practicing with this here, man. I mean, you really done help me out with this bull flag and bear flag, man.
Yeah, just if you can, just stick with those two patterns. See if you can like start picking those out and just stick with those. Once you feel like you can look at a chart, but oh, that's a pattern recognition. Oh, that's a bear flag, bull flag. Then move on to the next pattern.
Right. Wait,
Yeah.
Dave, guys, before we go, where are you guys from?
I'm here in Dallas.
I'm actually I'm actually currently in Dallas right now. I'm from Mississippi, the Silk, so I'm in Dallas for school right now. Been here for like 4 years, just for school.
Oh, okay.
Yeah, maybe I need to come visit Texas, man.
Where are you from?
I'm from New York.
Oh, wow, nice.
Yeah, Brooklyn.
You hear the accent?
I'm sure you do. I'm sure you do. But yeah. All right. Well, I appreciate you guys for sharing and letting me in. I just jumped in y'all call.
Oh yeah, of course.
It was open.
Yeah. Thank you. So I'll let you guys go. Have a good night.
All right, I'll see y'all in the chat tomorrow, man.
All right.
Sure.
Appreciate you too.